Hey guys, what's up? Welcome back to another video. In this video, I'm going to talk about the third quarter earnings results for PayPal. And as we can see over the last year, PayPal is down almost 60% in the same year that the S&P 500 is down only a little over 10%. So we're just going to figure out what the earnings growth looked like for PayPal in the third quarter, as well as some upcoming catalysts that could definitely positively affect PayPal stock. And then I'm going to figure out if this is a good buying price to buy into PayPal stock from a value investing perspective by figuring out the intrinsic value per share for their company. And so as we can see from this article right here, it's titled, "Is PayPal a top growth stock to buy right now?" They talk about a couple of interesting catalysts that are coming up that could positively affect PayPal's company. For starters, they pointed out how the payment volume for PayPal came in at about $337 billion in the third quarter. So that's obviously a pretty massive achievement for them. On top of that, their free cash flow increased 37% year over year to $1.8 billion. So that is definitely a lot of capital that they have access to then go and reinvest into the company or distribute to shareholders, whatever they like. And then lastly, we could see right here that this up and coming catalyst for PayPal, basically by Black Friday, Venmo users will be able to shop on Amazon using their Venmo balances. And so obviously that's going to definitely bring a lot more customers to PayPal. It's going to integrate their software more into the economy, especially with Amazon on Black Friday, because obviously a lot of people are going to be shopping on Black Friday. And so if they're able to use PayPal's services to do that, then PayPal will obviously be able to profit from that. But that being said, right here, they talk a little bit about how even though there's been a lot of good news coming out about PayPal's partnerships with Amazon, as well as another one with Apple, obviously PayPal is not the only fintech company. There's also Block's Cash App, which is also very competitive to PayPal. And so it could be tough to see which one of these companies is going to be able to obtain more market share in the future. And so that's one of the main reasons why they're pointing out that they think that investors might want to wait a little bit before buying into PayPal's stock at the moment. And so right here we see their balance sheet for the third quarter of 2022 compared to the fourth quarter of 2021. During that time period, their total assets have increased by about $1 billion almost. And then we can also see that the majority of their business is financed by liabilities as opposed to equity. And in their equity section, their retained earnings have increased from about $16 billion to about $18 billion. So that's obviously a good sign because that means that they have more capital that they could then use to redistribute to shareholders, buy back shares, and also reinvest in the company. And so we can see right here, this is their income statement for the third quarter of 2022 compared to 2021. During that time period, their net revenues have increased by about 11% from $6.1 billion to $6.8 billion. And their net income has increased by about 22% year over year from about $1 billion to $1.3 billion. And then lastly, their earnings per share have increased by about 26% from 92 cents per share to $1.15 per share. And so what that means, if their earnings per share is increasing faster than their bottom line, is that their shares outstanding have decreased. And as a result, their earnings per share have actually increased at a faster rate than their total earnings for their company during the same time period. So definitely a lot of positive green flags to see on their income statement. And so if I go to page 9 here, we can see their cash flow statement for the first 3 quarters of 2022 compared to 2021. During that time period, their operating cash flow has increased from $4.5 billion to $4.6 billion. In the third quarter alone, about $1.9 billion came from the third quarter of this total $4.6 billion for the first 3 quarters. And so that's an increase of about 29% year over year for the third quarter. And then obviously earlier, as the article pointed out, their free cash flow increased by about 37%. And then in their investing activities, we can see purchases of treasury stock. For the first 3 quarters, they've purchased about $3.1 billion. And in the third quarter of 2022, they actually repurchased about $939 million worth of common stock. So that's almost $1 billion returned to shareholders in the way of common stock repurchases. And so now right here, we can see this is a discounted cash flow model to figure out the intrinsic value per share of PayPal. Basically, Yahoo Finance is estimating that this company is going to grow at about 11% compounded annually for the next 5 years. They had about $5 billion worth of free cash flow in 2021, about $530 million of cash on their balance sheet after subtracting their debt, and they have about a little over 1 billion shares outstanding at the moment. And so that puts their intrinsic value per share at about $78 per share, which means that right now PayPal is trading very close to their intrinsic value per share if they're able to maintain an 11% growth rate over the next 5 years. So could be a good sign. Obviously, as the article pointed out, some investors might want to wait a little bit longer until the stock is trading at a margin of safety of around 30 to 50%, but they are trading very near their intrinsic value per share at the moment. Also, if I scroll to the right here, I compared them to one competitor whose financial ratios I wasn't really able to find as many financial ratios for some of the bigger fintech companies that are competing with PayPal in the market right now. But compared to Square, PayPal is dominating. They definitely have the better financial ratios, way higher net profit margin at about 16%. Square is barely even they're not breaking 1%. They're only at 0.94%. And they have a better return on assets as well, about 5 times that of Square's. So from a competitor analysis, looks like PayPal is definitely doing better than Square, but obviously I wanted to try to compare them to Block's Cash App, but I wasn't really able to get that information for this video, so I'll try to get it for maybe the fourth quarter earnings when PayPal announces their earnings then. But obviously, from an intrinsic value standpoint, it looks like PayPal is not doing half bad. They're trading very close to their intrinsic value per share, but time will tell to see whether those up-and-coming catalysts, like those partnerships with Apple and with Amazon, are going to have a positive effect on PayPal's stock growth into the future. Let me know what you guys think about PayPal in the comment section down below. Leave a like on this video, subscribe to the channel, and I'll see everyone in the next one.